Hello, everyone. So we're ahead of FOMC. Just about a couple minutes for Powell talks live, and I want to break down his speech while commenting over price action. But so far in CPI, had a really huge move higher. It moved a bit over 120 points at least on the initial release, and then 9:30 open continued to move a little higher too. So we haven't seen a reversal yet. We're still at the highs. Naturally, I'm thinking that we could at least see a retracement sometime this afternoon, later after Powell's speech maybe. But we are at all-time highs, and there's no ceiling to how far a high price can go. And at the beginning of the week, I wanted to see if maybe we would form a high of the week today and go lower. But with how Tuesday closed, way above Monday, I didn't see this as manipulation. Unless Wednesday was going to open up and then CPI was going to bring it lower. So when CPI brought it higher, it's just kind of like, I don't know, the bearish bias. Maybe I'm holding off on it a little bit more. So very uncomfortable to go long, I understand. But unfortunately, I think that is sort of like what's going to have to be the play here at least. Well, nothing at least tells me that we're going to go lower just yet. But there's different things I'm looking at. So there's the buy side liquidity, which is the current day's high. Obviously, I have that level there. And then this huge 50-minute fair value gap. You split that up 50%. We came down to hit that 50% level right here. There's also an order block here. This is a order block, which is in a, if you go from, I don't even know which, maybe this low to high, this is in premium. So if you go from the beginning of the move here, still in premium. So price could come down here, use this as a resistance, and then maybe target this low. And why am I looking at this low? It's not a spaced out low or anything, but it's the high of a fair value gap price. So that's why I'm looking at that low. It's just because it's the high of a fair value gap. So that's something that I'm looking for if price wants to reach down into there. I need to get some water, so I want to try and get that done before starting to talk about the monetary policy, but I'd like to talk about monetary policy for Powell. So okay, just real quick, the monetary policy, what I'll be looking for Powell to say today, this is completely unrelated to what price is going to do, by the way, so it has no correlation, at least short term. So this morning we had the 8:30 CPI, and it was a lower print than expected. And I had some of my business friends, a little older than me, sometimes they think that they've been in this game for longer, and the truth is no one really knows what the Fed is up to, right? Well, because that's the point. The Federal Reserve wants people to keep guessing on when the rates are going to come down. They're building in these expectations like they did in 2023 with the 7 rate cuts this year. And the whole time I was saying to my friends that they're not going to cut. They're going to stay where they are, or they're going to put them higher, the rates. The reason why is because the Federal Reserve wants inflation. Okay? Now, granted, at the time I kept saying they're not going to cut the rates because I thought that rates needed to go higher for a better economy, which is true. But the Federal Reserve can just put the rates down and keep the crisis for later and make the gap between rich and the poor bigger. So raising the rates is the right thing to do, but because they're political, they won't do that. However, the reason they have high rates and they're not moving up is because the Federal Reserve is using this manipulative tactic to get people expecting the rates to come down. So now they're spending in the economy as the inflation is this is pushing inflation up. And with these high rates, what they're really doing is that they're pushing up the neutral rate. So there's a neutral rate in the economy, and there's the nominal rates, the real interest rates that we see, that we know. The neutral rates right now, the experts, they calculate that, and then They say that it's about 2.5%. Different economists say it's closer to 3%. But basically, the point is to raise this neutral rate, because if the interest rates go beneath this neutral rate, that's when in times of crisis you want to send it down beneath that neutral rate, so that the economy stops spending. But if that neutral rate is close to zero, the Federal Reserve can't do that, because it can't, the lower bound can't go beneath zero either, and that's another thing, they want to increase the lower bound. So far, Powell's talking about how strong the economy is. So if we're going higher, we should be respecting these down close candles on the 50-minute chart. And since we're very volatile, I often go to the lower time frame. So far from lower time frame, it doesn't look like we're respecting these up close candles, right? So you can go even lower and then see how price is reacting to these fair value gaps. Not willing to fill them. This is kind of hinting that it can continue going lower. There's a 1 minute order block. There's a propulsion block here. Hold on. What he just said, I'm going to rewind this, but I want to hear specifically what he said. Wish I had the time on it. Inflation has eased notably in the past 2 years, but remains above our overall long-term goal of 2%. You see, everyone's hearing this and they're thinking the Fed want to get inflation to 1%, but that's not it at all. The Fed want to keep inflation above 2% for a longer term. That's exactly what he just said. But the whole media, they're taking this as, well, okay, inflation is going lower. The Fed's goal is 2%, not understanding that it's over a period of time. That period of time could be 40 years, could be 50 years, could be 20 years, 10 years. And you take the average, it's probably been around 2% or beneath 2%. So if inflation's coming down, you think that's a bad thing. The Fed want more inflation. So this higher inflation allows the Fed to have higher rates. The goal is so they can have high rates, because don't think that if they put down the rates to have high inflation, it defeats the purpose of having higher inflation, because the purpose of having higher inflation is so that they can put the neutral bound up and the effective lower bound up. That's the reason why they have these high inflation, so that they can have higher rates, and then their monetary policy can once again be effective. It's a dirty trick what they're doing, and it's evil. It disgusts me, because they're basically manipulating the whole market. But very bearish price action so far. I'm gonna resume the speech. I had to send a text. Yeah, I'm not live trading, by the way. I'm just observing price. I'm gonna try and maybe paper trade, but I'm not live trading. So don't think that I'm texting, I'm listening to Powell's speech, that I'm focused enough to trade live. Like, no, this isn't how you should treat live trading at all. See, I'm reading in the comments of the stream. People are saying, "Oh, inflation's coming down. Rate cuts are possible." Like, it's all over the media. It's in the comments. Bank of Canada just cut last week, so everyone thinks that the Federal Reserve is next to cut. They might cut once this year, but they'll only do that if inflation really keeps declining and more people believe that Fed aren't going to lower the rates. When people believe Fed aren't going to lower the rates, that's when they're going to lower the rates. Until people believe that the Fed isn't moving or they're going to raise the rates, rates aren't going to come down because people are going to keep spending as if the rates are coming down, and it's going to continue pushing inflation up. Business processes are still going to occur as if the rates are coming down, and the long-term effect that the rates have are just now starting to play into effect. So it's not a big deal that the rates are really high, just yet at least. They are very restrictive though, so it's coming, but not anytime soon, at least based on what the market believes. See, the Federal Reserve interest rates are just like markets here, just like this market. It works the same way. It's based on what people think, the psychological feelings that price movements give out. I guess I'm trying to find a way to phrase it properly, but okay. So what he's saying is, if the everything plays out as we expect, which inflation will not come down, it will just. She said that the if everything continues to play out as they expect, the federal funds rate will go down to 5.1% and 4.1% next year. So right now, what everyone's believing is that the rates are coming down. Everything the Fed is seeing is continuing to, continuing to happen, and it seems like there's good news and rates are coming closer and closer. Well, in 2023, they said that we would have 7 rate cuts this year, and now we may not even. People are saying we might not even get one. So I don't know. He's saying that it doesn't mean that they're going. These are just expectations. He said if the economy continues to evolve the way they want to see it, what if it doesn't? So at 3.1% at the end of 2026. Okay, and he said it clearly. These projections are not a committee plan or any kind of decision. So it's not a plan or decision. It's just a projection. Okay, like look. You see this projection here? Did price go to 5 deviations? No, it came short. It missed. So they can very easily miss. It's just a projection that they're doing, and the purpose of that projection is to get people emotional and to get people making decisions. That's it. A balanced price range right here, by the way. So there was a small fair value gap that came down and another one that matched it. I'd expect this to hold price and then maybe see a run higher because we're really having trouble going lower. We came back to a discount to that order block. We seem to be bouncing between discount and premium. Market's being held right now, but I'd want to see if this level is going to be respected, which is just if you take that fair value gap. So that range, if price comes into it, is kind of like the brick wall, and then this whole fair value gap. See how it caught price, but the refined level that's stronger is the balanced price range there. That should hold price and send it higher if price is to go to the highs. If not, then I expect more consolidation or a sell-off into some of these lows, maybe back down to the consequent encroachment. I would have wanted to see that after hitting the highs because we were just so far up in the premium, but we're also not really. We're taking a long time to go up there, and every short-term high we hit, we come right back down. So you see, it seems like it's going to start to attack those lows now. Nothing high probability just yet. And wow, no, maybe actually it might respect that level after all. I'm looking at the bodies. And one thing I really don't like right here is all these long wicks, right? It's not like, see, like when we released over here, we had a little bit of price action that was just solid candles in one direction, and now we're just moving sideways. So it's really like being held. All right, the first question, the gentleman asked the first question. Notice the language Powell was speaking there. He kind of stuttered when he said, he said, Powell said that inflation is coming down and we want to see more of these readings. But if inflation continues to move down to that 2%, and then he stuttered a little bit and he said, in a sustainable manner, and then he continued on with whatever he was saying. He's adding that sustainable part because it's possible that inflation might go down too much, to closer to 2%. Like they want it to come down a little bit to 2%, right? So that people can continue to believe that the Fed want to cut rates, and the people continue to spend and to think everything's fine, everything's gonna come down. But in reality, those rates need to stay up as much as they can to keep the rates elevated. And it's, if you don't, if there's another thing you can look at too is the TGA, which is a bank account in the Federal Reserve. It's the Treasury's bank account, the Treasury General account, and right now it has the most cash it's ever had since 1929 and then COVID. There's only two other times in history it's had more cash in that bank account, and that's the bank account that they use to send out stimulus checks or whatever government spends on. So it's housing lots of liquidity in there right now. It might get ready for another round of stimulus. It might be for something else. There's ideas, but obviously I think that the government and the Federal Reserve are going to be prepared to do whatever they can to do whatever they have to do to keep rates elevated for a longer period of time, which would also mean pushing up inflation for a longer period of time. Okay, here's where I'd start to want to look for trades because we're seeing solid candles, not too many wicks. I want to watch this fair value gap and see. Um, I would want to see a close above this and then use the reclaimed order block, that up close candle there, and inverse fair value gap. We had an order block down there. However, We have relative equal lows here, so I don't like it. I see how the Nasdaq is a stronger asset. The other ones are making lower lows, and so I'd expect uh, I'd expect the Nasdaq to be pulling the other assets higher if it is going to go higher. But I don't know. I just don't like the relative equal lows. Sometimes I ignore them because we might only see a trade back down here later. But I always say this is better to wait till we have that later and try and get in the now. Alright, so we had that inverse fair value gap. And we have reclaimed order block. I'd expect a run up to this buy side liquidity. Let's just say there were no relative equal lows, and I was in a trade to run up. I would want to take profit at these highs. There's the biggest high there, and then or there's just these short-term highs, but I'd expect it to run. Why is there two? So I like that we're seeing these fair value gaps not be completely closed in, right? We're not closing, not even the bodies are inside of this gap. We're not filling it with the wicks. And I want to see the up close candles consistently trade through the down close candles to the upside. And I don't like how we're rejecting this high. So we got above this high and we retraced. I don't like that. I want to see it continue running higher. It seems like we also... No, we didn't reach the lower block, but we'll see if it's going to continue running higher. Now, when it gets up to these highs, it could either do... It can continue to expand higher, and then it just might not be a trade. Or it can reverse and then move back into this range, maybe target the lows. Right, like we have been... Like if you look at the higher time frame, you zoom out, we have consolidated basically all morning after CPI. Okay. And so when we get above this, people might think it's a breakout, and that would be a perfect opportunity to bring it lower to these lows. That's where liquidity would reside. So that is a possibility. It doesn't mean it's going to happen, but that's something I could be watching for reasonings trade lower, with that bias in mind and those ideas in mind. All right. So see, we came above this high. The reason why I said that I couldn't really... I said either this high or it could be that high that we target. Because you see, as soon as we got above this high, we had another move lower. Now, notice how we have filled this gap completely. I don't think it's going to start a move lower. I think it can... this isn't really... we didn't really get above this as much as I would want it to see. I want to really see it close and displace above this high to clear it, more efficiently. So, but the fact that it's retracing is kind of hinting that we are in a premium. Price is starting to want to seek a lower. It could very well reverse here pretty soon. This could be a short-term high that it comes back to later, leaving a breaker. That is an idea. I'm not saying it's going to happen, but it could be an idea to work with. Sometimes it helps too. Taking away the wicks. Seems like, where's most liquidity if you're looking at these wicks? We're trending lower. Sorry, if you're not looking at the wicks, right? So where is most liquidity? Most people are probably in sells. They're probably selling up here. This is perfect to run it higher all the way up to this level here. All right, because everyone's selling thinking it's finding resistance on this trend or whatever. And so what it's going to do is it's likely going to break out, close up here, displace up there, make everyone think that something like this might happen, right? Or something like this might happen. And then instead it runs up and then it runs lower back, or it'll consolidate around the range once it gets down to 50% of this range. Something like that I'd expect. And if you turn the wicks on, it'll give you a complete different. You'll see that we traded much lower already, and you won't spot this trend as easily if you're not looking at the bodies. So make sure to pay attention at the bodies on the higher time frame. And on that 1 hour chart, this looks absolutely horrifying. I wouldn't want to trade that. Four-hour looks like it might be pricing in a top. All right, we just took out this high, so we busted through not just this high but that high. Notice how we have a little bit of displacement, a little bit of speed. We're closing above, so that's what I want to see. I'd like to see the same thing on the 15-minute chart, preferably. Rather not see a wick up there. There's only 2 minutes left to that candle though, so it's very volatile though, so it doesn't have to, but I'd like it to. And we are approaching 315, which is 315 to 345 is the last hour macro that ICT talks about. That could be when we see a reversal. Alright, so far no major displacement lower. We've created like an order block here, for example, on the 1 minute, but why wouldn't you want to just say, oh, it hit this high, we create an order block and I want to short here? Alright, because again, looking at the higher time frame, where are the bodies? Now the higher time frame body's closed right there. Right, and I believe that candle was before that. Yeah, before that candle closed. So we have a close on the 5-minute chart, we have a close on the 15-minute chart. Now if you look at the actual bodies, boom, you see that okay, we have a 15-minute close above this high. Now's where you want to see, okay, can we create a 15-minute order block? So can this current candle of 1515 make its way, make it high, and then displace lower and close beneath that 1510 candle? Oh, this is a 5-minute chart. All right, can this one close beneath the 15 o'clock candle? That's the trade, the idea that I'd go in looking for. And so this is when I'd want to see bullish fair value gaps be broken, down close candles be broken, and displacement to the downside. But we might not get that. We might just continue to run higher, which is why it's better to wait for a clear displacement. So let me look at how the other markets performed today. We have gold, which seemed to stay, not really do much. And this is probably just because, well, there's not much panic. So gold has kind of, with the good news, gold has sort of stalled a little bit. And dollar came back down to this order block, the weekly order block. All right. One thing I also find very confusing is the dollar. I learned recently, I always thought they were inversely correlated, but apparently the dollar, stocks, and bonds all move together. So higher time frame, when a dollar goes up, everything else goes up, except for, because it's weird because sometimes the dollar have these huge shocks, like when there's news, like today and Friday, and then the other assets will do the opposite of what the dollar does, but longer term they move together. And bonds, yeah, on the way back up. Oh, look at that. Okay, hold on. We're starting to see, okay, so this is sort of like what I want to see in terms of displacement. Here I'd be looking at cycling between all the different lower time frames. There's not really a nice and clear gap that I see. There's a 5-minute gap that we could inverse right here if we close beneath that. That could be a trade idea, and we could form that 5-minute order block. There is 1 minute till we close, so it's likely to happen where we form that order block, and then the 15-minute chart is on its way down to form this order block down here. Preferably, I want to see this whole candle close beneath the 15 o'clock candle. I'm not going to, I could short the low of that fair value gap, and then it's possible it runs up to the order block, so I'd be asking for a pretty wide stop. But yeah, it looks like it's gonna just absolutely, might not even come back. I'd look at all this here. Include that one. Actually, maybe. Hold on, let me just go on a higher time frame. Yeah, so this area here, I want it to act as a reclaimed order block. You could refine it down to just this big, oh my god. Just that big up close candle there. But that 5-minute chart closed now, so we have this huge move lower into a discount, somewhat discount, into this fair value gap. So let's see what occurs here. But fortunately, there were not really any retracements. Even on the 5-second, we barely wicked up to give any entry. So you'd have to be selling that pressure going down instead of selling up close candles. This makes me think, when we have something like this where it's super fast and going lower, this makes me think that it's easy for us to come back up in here and fill all these gaps. These could always be breakaway gaps. If we see one of these candles, either on the 5-minute or 1-minute or whatever, like if we close down here and then the next candle comes up and fills that fair value gap completely immediately. So for example, with this candle right here, we were to come up immediately and then run back down, right? And we were to completely balance out that 1525 candle, the one right there, then I would expect that to signify, and we wick away from it and we continue moving lower, then I would expect that to be a failure to trade up into these candles, and I'd be very bearish because we're leaving breakaway gaps. But so far, that 15-minute candle we could always, from a 15-minute chart perspective, we can always come back up and hit this order block there. So I'm going to mark this. I do expect, unless these last 3 minutes are so bullish that we actually close above it, I do expect this to be a bearish order block on the 15-minute chart. And I want to watch those candles too, if they're going to stay inside that fair value gap. Oh, I wonder if GameStop is moving. I hope everyone knows not to buy this. It's a terrible idea. And yeah. So yeah, even though obviously I said this was the move I was looking for, there was no entry. It happens. Oh well. I'm fairly confident this will be a bearish order block. This is how far lower we are, but at this point I don't really expect price to come back into it. If it does, that would be pretty crazy. Actually, I'm wondering if that could be a possibility. We seem to have taken a lot of liquidity, and we're finding more resistance from these levels. So if we retrace up here, because we haven't retraced yet, right, in this move lower, if we retrace maybe to the lower end of that consolidation, it could leave more liquidity down here. Honestly, at this point we are 15:30, so I would just, gun to my head. I'm gonna stop recording, but gun to my head for the rest of the afternoon, we just continue to fall lower. But anyways, I want to see if it's just gonna retrace here. That's all. So that's what I'm gonna stick around for. There's too many levels on my chart. What is this?